Hi everybody, this is Paul Girard. I'm a student loan consultant working with the American Dental Education Association, and this repayment module is on refinancing your student loans. What you should know before you refinance your student loans with a private lender. Now, in theory, refinancing with a private lender is similar to federal consolidation. Remember, with federal consolidation, you're trading debt for debt, but you're trading federal student loans for a new federal student loan. With private refinancing, when you refinance with a private lender, you're trading student loan debt, federal or private or both, and you're trading that in for a brand new private loan. So similar to federal consolidation, but this is a private loan you are getting, not a federal loan. This is done by the lenders with a promise of lower interest rates and therefore substantial savings in repayment, especially when compared with the rates on your federal loans and the dollar amount that you would repay with your federal loans. So the big push here is to try to get you to refinance with a private lender to get a lower rate and substantial repayment savings. Now, there has been a recent increase in the number of lenders who are offering to refinance student loans, and they all have their different criteria, and you'll need to talk with them about their specific criteria. But in general, they are going to be looking at your credit, your employment history, your salary, and also your debt to income ratio. There may be some other factors as well, but in general, those are the things that private lenders will be looking at to consider you for a private refinancing loan. Now, whether or not you refinance is obviously a very personal decision based on a number of different factors, but we would encourage you to ask a series of questions of any lender you are considering using for a private refinance loan. So let's go through these questions. Certainly you want to know about the interest rates and you want to know about capitalization. Remember, capitalization is where any accrued and unpaid interest is added back to the original amount that you borrowed. In theory, capitalization should not be an issue for you once you start actively repaying your student loans, but always ask the question about capitalization and what will trigger that to happen. With regard to interest rates, the lenders are likely going to offer a variable, a fixed rate, and also some are now offering what are called hybrid rates, variable for a while, fixed for a while. So ask about the interest rates. You can expect the fixed rates to always start a little bit higher, and if you are risk averse, you are afraid that a variable rate could grow too high, you may be more interested in a fixed rate. If you choose a variable rate, be sure you know how often the rate can change and what triggers the rate change. And it's extremely important for you to know how much notice you get about the new payment. Remember, if you are using automatic debit or ACH to make your monthly payments, you certainly want to know if a larger amount is going to be deducted in upcoming months. So find out how much notice you get if there is a rate change, how much notice you get about the payment changing. Also ask about maximum and minimum rates. How high can the variable rate go, and is there a minimum as well? You also obviously want to ask about repayment options. The general rule of thumb is that the more you have borrowed, the longer you get to repay your private refinance loan. This will depend on the lender, but in general, you may see repayment terms in 5, 10, 15, and 20-year terms. You may want to ask if there is an interest-only option if you need to keep your payments lower early on in repayment. And you can ask about a repayment plan tied to income, but don't expect that there will be many, if any, repayment options that are tied to income like there are with federal plans, like income-based repayment, pay-as-you-earn, and revised pay-as-you-earn. You're just not going to find that on a private refinance loan. You may want to also ask about options for payment during residency. When we close this presentation, you will see some cautions about refinancing during a residency program if you do a residency program. But if you're thinking about that, be sure that there are some options for minimal payments during residency when your salary is low compared to your debt. You also want to ask about postponement options. Are they available? Are there any fees to postpone your loans? Once again, in theory, this should not be an issue for you if you are ready to actively start paying on your student loans. But once again, if you do this during residency and something comes up where you need to postpone your payments, you need to know if you have any options to do so. Ask also about the impact on capitalization if, in fact, you are able to postpone payment on a refinance loan. You may also want to ask about cosigner requirements. If you apply and for some reason are denied, you may need to bring on a creditworthy cosigner to help you get the loan. But remember, having a cosigner may also help you get a lower interest rate. If you get a cosigner, be sure to ask about the cosigner release provisions. This is where, after a designated number of payments, you can apply to have your cosigner released from the liability of the loan. Very important. Also ask about forgiveness provisions. Now, we're not talking about public service loan forgiveness. These are not federal loans. These are private loans. But as hopefully you know, with federal loans, in the event of your death or disability, the debt is forgiven. Some of the private refinance lenders are offering a similar benefit. So be sure to ask about forgiveness provisions in the event of your death or disability on your private refinance loan. Also ask about the impact on your credit when you apply, both pre-approval and also submitting a full application. So let's take a look at whether or not you're a candidate for refinancing. Well, you may be a candidate for private refinancing if you have steady income, perhaps a solid employment history, and you're ready to actively start paying on your student loans. You're not worried about postponing payments at any time, and you're not interested in payments tied to income, and you're not a candidate for public service loan forgiveness. If this happens to describe you, you may be a strong candidate for refinancing your student loans. But you may not be a candidate for refinancing, at least not right now. If you need to be cautious with your loan payments, perhaps you need a repayment plan that is tied to your income, like income-based repayment, pay-as-you-earn, or revised pay-as-you-earn. You may also not be a candidate if you're interested in public service loan forgiveness. Remember, PSLF only applies to federal direct loans. It certainly does not apply to private loans, including private refinance loans. You may also not be a candidate if you may need to postpone your payments at some point, and you may notice that these items listed here often will describe a dental resident, someone in a hospital-based residency program whose stipend that they're receiving as an employee of the hospital is low compared to the total debt that they have. This is one reason you need to be a bit cautious about refinancing if, in fact, you are doing postdoctoral work in a hospital-based residency program. We hope the information in this module has helped you get a better understanding of private refinancing and whether or not you're a candidate to refinance with a private lender. We wish you good luck and nothing but the best from the American Dental Education Association.